If you saw this breakout coming, so did tens of thousands of other traders as well. That's why setups fail. Successful trading doesn't depend on obvious patterns, it depends in most cases on the hidden forces driving those setups behind them. And it's not your mindset, it is the method, guys. Successful strategies do not only look good in hindsight. Successful strategies, they take into consideration a lot of things that other strategies that are looking in hindsight do not, such as structure, context, and repeatability. In this video, I will review a more complicated approach to trading, and I would compare two trades. One of them was taken yesterday and it was still open this morning, and the other one was taken this morning. So one of them was a double-digit returning trade, the other one was just a regular trade. So I would show you how I was using one trade to lock profits of the other and what was the outcome of the whole game plan. So let's dive in, guys. It is not your mindset, it is your method. Most strategies only look good in hindsight. And as you can see here, I'm comparing those two trades that were taken in the trading room. These are trades that were taken in real time. So the one on top is the 15-minute DAX chart, which was taken yesterday. Today is the 22nd of July, and day of at the time making this video. And the one below is the one that I took this morning, and this was Dow Jones trade, which they're both short trades. So as you can see from the upper image here, price has already bounced from supply zone. So my thinking is it could have just continued going higher. So I decided to take profits considering the fact that I was in another short Dow trade from this morning, as you can see from this screenshot below. So if I'm totally wrong and we see a breakout through the zone on the DAX trade, the one on top, very likely my Dow trade will continue going lower. But if I'm right in suspecting there could be a reversal, I will end up with a 10x trade on DAX and a break-even trade on the Dow here at the bottom. So it wasn't making any logical sense for me to let this trade run because the odds were, particularly in this situation, they were getting stacked against me. And as we'll see, what happened is something that odds didn't really have anything to do with, or at least I would like to think it this way. But what happened after was my Dow trade got stopped out at the break-even. So neither a loss nor a win, and DAX actually broke below the major supply zone, and it went further down to reach at the moment 1 to 27, or it would have been 1 to 27 risk to reward ratio. And the major question that I'm asking myself after every trade that I'm closing is, would I have done the same thing if I knew what was coming? And the answer is totally. In situations like that, you need to look at the worst case scenario and where you don't want to end up, basically. In this case, I didn't want to end up with a break-even trade after hitting a 10x return. And in particularly this case, because I was running a Dow trade, and if I was wrong, my Dow trade could have ended up continuing its downfall, and I wouldn't have any regrets closing my DAX trade too soon. As fate had it, what happened was something that happens in a small fraction of the cases, and it was both trades went in opposite directions. So DAX continued its downfall, and Dow went up, ended up being a break-even trade. So there was another scenario that I didn't disclose, and this would have been valid if I were only running my DAX trade. In this case, I would have trailed my stop loss and most likely ended up with a 1 to 27 risk to reward ratio trade or higher. This was the least obvious of all scenarios and obviously the biggest winner. But did I suspect that, or did I have any clue that this would happen this way beforehand? No, because I don't have a crystal ball and nobody has. So in situations like that, you guys need to do whatever makes the most logical sense, and you need to do everything possible to protect your P&L. If I were running only the DAX trade again, that's what I want to emphasize, I would have probably trailed the stop loss, because at this particular case, I didn't have any other trades, or if I didn't have any other trades, I would have just trailed it and let the market decide if I'm right or wrong. And in this particular case, trailing it by the rules, it would have let the trade breathe and make a new low. So we would have probably ended up with a 1 to 27 risk to reward ratio trade or higher. But did I do this? No. Shall we think about what could I have done better? Again, the answer to this question is no, but I should at least reflect on the trade, and this is exactly what I'm doing, and not have any regrets of taking a 10x trade. And this is exactly how I'm feeling. So again, do I have any regrets of doing it this way and taking just 1 to 10 on this trade? Definitely not. So I followed my plan. I did the most logical thing. I won a 10x trade. Could this trade have been a 1 to 27 trade or higher? Absolutely. But don't forget that this is just one trade from a sequence of trades, guys. In the grand scheme of things, you need to do the right thing at the right moment, because next time, if you are tempted to let this trade run to 1 to 27 or higher, it might actually reverse and stop you out at the break even. So if you want to reach consistency in trading, always look from a position of a losing trader. And this is the key. Consistency doesn't come from chasing the highest R's, guys. It comes from doing the right things systematically. Every trade is just a part of a larger sequence, and protecting your edge matters more than squeezing every last pip. I followed my plan, I took the right decision, and I think this was the most logical thing to walk away with a 1 to 10 risk to reward ratio on this trade. And always, always, always look at the market from the perspective of a losing trader. This will keep you away from costly traps and also help you to sustain your consistency.